So if it's not correlated, that means the 60-40 portfolio can be replaced with a 55-35-10 portfolio. And so do the quick math on what happens when 10% of hundreds of trillions of dollars flows into an asset that only has 450 Bitcoin a day available from natural sellers. That's $25 million a day of natural selling. It's not that much. And so when people reallocate their investment portfolio, then that's very bullish for the asset class.
In this recent conversation with Mario Nall and Michael Saylor, we explore how the Federal Reserve's recent monetary policy shift is influencing Bitcoin's price, the increasing regulatory clarity around Bitcoin ETFs, and why institutional adoption could drive Bitcoin to new heights. Before diving into the details, don't forget to like, subscribe, and share this channel. Now let's hear from Michael Saylor.
I think that if we're talking about the Fed, we're talking about an interest rate policy, and I think the interest rate policy is going to be a bit looser. And so all assets will be a winner with a less restrictive Fed, and I think the writing is on the wall there. I think with regard to regulatory clarity, the real key point here is the vast majority of the money in the world is sitting in 60-40 bond portfolios or sitting in real estate. So the traditional money, conventional money, is sitting in a 60-40 portfolio or real estate. The scared money, the traditional scared money, is sitting in gold. And so the only thing that Bitcoin needs to win is just to be acknowledged as a legitimate asset class. When money managers like Fidelity or BlackRock point out that this is an institutional grade asset, a digital gold, a digital property, or a digital capital, that's the most important thing that's happened in Wall Street in 40 years. And last week, BlackRock published a white paper where the headline was Bitcoin, a unique diversifier. And they said not only is it a legitimate asset class, well, by the way, the regulators help with that. When the regulators approve spot ETFs and when they approve options trading, they're signaling to all these traditional old money investors that this is not tulip bulbs, this is not a scam, this is legitimate. So they do their part by showing it's legitimate, but BlackRock does their part by pointing out it's a unique diversifier. Everybody in the world, if you look at high net worth families and portfolio managers, they're looking for the great white whale. The Moby Dick of investment is an uncorrelated asset which will perform. They want something which is not correlated to bonds. They don't want it correlated to risk assets. They call it alternative investments. You know, big banks have conferences for alternative investments because anybody in the world can buy a bunch of stocks. You know, it's pretty obvious. You can buy them in 15 seconds. So they end up doing things like buying portfolios of timber rights, you know, or natural gas pipeline, you know, rights of way, or the classic, you know, great alternative investment for the last 100 years, just real estate. I just buy some scarce desirable land because I feel like when my stock portfolio crashes, I want something else which is not going to crash at the same time. So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated. And all this regulatory clarity, like, well, I mean, regulations mean different things to different assets for sure, but Bitcoin is a very simple principle. It's like just digital capital. So I've said before, it's like, it's either going to zero or it's going to 1 million, because if it's tulip bulbs and if it's not legit, if it's a scam, it's just getting regulated out of existence, right? But if it's legitimate, it's basically everybody's holy grail. It's like basically the font of eternal youth for investors. It's the thing everybody wants, a high performing asset not correlated to the rest of their portfolio. You don't even have to have to agree that you understand it. You just have to agree it's legitimate and it's uncorrelated. And at that point, a portfolio manager says, well, just give me some of it.
We just heard Michael Saylor discuss the Federal Reserve's policy changes and their positive impact on Bitcoin. Now let's delve into his insights on the growing regulatory clarity around Bitcoin ETFs and how this shift could unlock significant institutional investment. Let's listen to Michael Saylor's perspective.
Gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solved the issue of custody. They solved the issue of compliance, and that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street. Right, billions of dollars is stampeding into those instruments. Oftentimes what's going on is the regulated instruments, like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, that's it's the green light for traditional money and institutional money to enter the asset class. Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020, it was a question mark. But then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall, and so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital, right? If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital, not so controversial. And so when you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, yep. You're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question.
To watch the full interview, check out the link in the description. In this insightful conversation, Michael Saylor shares in-depth perspectives on Bitcoin's upward trajectory, focusing on the Federal Reserve's policy shift, the impact of regulatory clarity around Bitcoin ETFs, and the potential for large-scale institutional adoption. We'd love to hear your thoughts. Do you believe Bitcoin will continue to surge with these regulatory changes? How do you think the Federal Reserve's actions will shape the crypto market? Thank you for tuning in. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content on the innovative world of decentralized technologies.